Let's break down how Airtable, once an $11.7 billion unicorn, just sold for a fraction of that, and who actually got paid. At its peak in 2021, Airtable was the star of the no-code movement, hitting its peak valuation after raising $1 billion in just 9 months. Fast forward to today, it's been acquired by Bending Spoons for an enterprise value of $1.285 billion. Even after including its cash reserves, the total equity value of $2.25 billion represents an 81% collapse from the peak. The wild part, Airtable was not a dying business. It was generating roughly $480 million in recurring revenue, growing 20% year over year with 90% gross margins and used by 80% of the Fortune 100. So why did it sell for less than 3 times revenue? First, it's a victim of the software as a service peak anchor valuations. That $11.7 billion valuation was set during the 2021 funding frenzy. By 2026, buyers were no longer paying those kinds of prices, and they saw Airtable as a mature, slower growing business. Then comes the venture math. Airtable raised over $1.4 billion in non-participating preferred equity. For VC-backed companies, sales usually follow a strict waterfall method. There's an order to who gets paid first. The late-stage Series F investors essentially just got their money back, seeing about a 0% return over 5 years. The early investors who came in at much lower valuations walked away with meaningful gains, and employee equity was the real casualty. After preferred investors were paid, common stockholders, founders, and staff split roughly $850 million. That's about a 10 times reduction from peak paper values, which left many employee stock options deep underwater. And third, you might have guessed it, the AI shift. Airtable's advantage was abstraction. It let non-technical people build on top of complex databases through a simple interface, but AI coding agents have started to erode that edge. Enter Bending Spoons, a Milan-based company that IPO'd on the Nasdaq just weeks before this deal. They describe themselves as 75% tech company and 25% private equity. Their playbook is consistent: acquire mature brands like Evernote, Vimeo, and WeTransfer, make deep layoffs and rewrite the code with AI-driven tools, run the products lean, and use the cash they generate to fund the next deal. They are known for radical simplicity, very selective hiring, and for never selling a business once they own it. Airtable fit this template exactly: strong revenue, loyal customers, and about $965 million in net cash on the balance sheet. That cash meant much of the $2.25 billion equity value in the acquisition was effectively funded by Airtable's own unspent venture money. Here's the twist. Right before the sale, Airtable's founders spun out their own agentic AI project called Hyperagent into a separate company they own. Founder Howie Liu is now using Hyperagent to chase the AI frontier with a clean balance sheet, while the mature database business is handed off to Bending Spoon's operating machine.